Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Tuesday, December 13th, 2011 is sponsored by Realtik. All right, guys, let's get right into the mix today. The markets are dipping here on this particular 10-minute candle, and that's essentially because the Federal Reserve just released their interest rate policy. Today at 2:15 it came out, and again the markets had inched up into that, hoping for some talk of QE3. But frankly, the Federal Reserve did not say that they're definitely doing QE3. They didn't allude to it. They didn't really go the extra mile, and the markets are seeing a little bit of profit taking on the fact that that was not mentioned. So again, it's not like we're negative on the day. The markets are still positive. Dow, in fact, is still up about 30. Check that, about 70 points on the day. Nasdaq is down about 1 point. S&P's up about 2.5, and that's all on the fact that you're seeing a little selling off of that lack of QE3 or clarity on QE3 from the Federal Reserve. Now, bottom line is this: the markets opened higher today, obviously on the hopes of the Federal Reserve, and also on some positive things, hopes out of Europe. Europe is still the leading driver. I know a lot of people think the Federal Reserve is number one. That is not the case right now. It's all about Europe. Yes, the Fed is obviously having a little bit of an impact, but look at the small move on the Fed. I mean, you essentially got one down candle here, and now you're bouncing a little bit. That's it. That's all the Fed's impact was today. So obviously, majority of it is about Europe. And you have to continue to remember that. Okay? So just keep that in perspective here. In terms of the market and where it's going to go in the short term, you have to just continue to marvel at the opposite movements we've seen. Last Thursday, down. Friday, up. Monday, down. Now Tuesday, up. You're just chopping sideways. And what this is telling us is this is bullish consolidation. All right, in spirit of bullish consolidation. You can see it better on the 60-minute chart. And I kind of covered this to my members yesterday. You can see right here, if I zoom out a little bit, you have this big, or zoom in a little bit, in fact, you have this big move up, and then look at this choppy consolidation. Very, very choppy. In fact, interestingly enough, the 60-minute chart here off of this latest up move from yesterday is actually an in spirit of pattern bullish. So that's another thing I'm going to keep an eye on. So assuming we don't sell off too sharply today, I mean, if the markets tank drastically, then it would negate that pattern. But right now you have an in spirit of bullish pattern on the 60-minute as well. All right, so you have the macro daily, 60-minute longer term bullish consolidation, and you have a micro shorter term bullish consolidation on the 60-minute. 10-minute is a little different. 10-minute is actually slightly bearish here off of this initial down move, but that's nothing that I think as of yet we need to pay attention to. Again, intraday 10-minute charts are very short term. It'll play out before the end of the day, and you'll probably have a different pattern showing up by the end of the day today. All right, let's go over the couple other things. What's moving today? What is in play? Well, Best Buy is definitely in play after earnings disappointed Wall Street. Great little move down here. One thing on Best Buy I want to show you guys is this gap fill right here. Look at this. You're actually piercing the gap fill right now. So you're into an area of a little bit of support. Am I being a buyer here on Best Buy at this level? The answer is absolutely not. Why not? Because it's an InTheMoneyStocks proprietary signal that tells you you must wait 3 days after major earnings news or key news in a stock. 3 days, it's called the ITMS 3-day rule, and it essentially allows you to maximize your entry levels. A lot of traders I know, a lot of amateurs, they buy right away. They see Best Buy gapped down this morning, and they say, oh, I'm going to buy it right away because it's gapped down, it's so cheap. And then what happens? They buy it right here on the gap down, and look at where it goes the rest of the day. Anyone who bought today essentially is losing money as it's at the lows of the day and keeps falling. The ITMS rule avoids that and gets you in at the right level. 3 days later, usually margin selling is done, hedge fund selling is done, and the buying opportunity is at that point. So I'll be watching this in a few days. I would love to see it come down here. I mean, this would just be a sweet entry for a bounce. I don't know if it'll get there, though. All right, so we'll watch that very, very closely and see how it plays out. Looking across the board, let's see what else is in motion today. Retail sales, by the way, were also poor, so you also had the retail sales factor pushing the markets a little bit on the weaker side here, especially retail stocks like Best Buy and Ralph Lauren and American Eagle and so forth. All right, going to a couple other stocks, JP Morgan. JP Morgan is up slightly on the day, but it's not really up that much. As we wait for the chart to pop up here, you can see it's kind of matching the spiders. Spiders are up a little bit, the S&P's up a little bit, JPM is up a little bit. Very much in line with the market today. Goldman Sachs, let's take a look at Goldman Sachs. Goldman Sachs, ugly chart here, guys. This is a bad rollover on Goldman. Look at how weak it's been all day. It had a small gap up and then tanked, and then it's been negative. While the market's been positive all day, Goldman's been negative, and look at this rollover. Very, very sharp rollover down about $3. I'm not going near that, although let me find the scalping level for you guys this afternoon. I found it right here. Here it is. All right, you're actually not too far away from a gap fill. Gap fill will be at 94.40 to 94.50, $94.40 to $94.50. If you tag that level, look for a scalp there. You're about 30 cents away from that area, 20 to 30 cents right now. In fact, you're getting very, very close. That'll be a key gap fill for a scalp long on Goldman Sachs. All right. What else is moving today? Worries about the Straits of Hormuz, folks, sent oil sharply higher today. Look at this move initially on the open. One of the bigger moves I've seen in an intraday period over the course of 10, 20 minutes. Look at the spike on the USO. This is because Iran came out and said they're going to be doing some drills and closing the Straits of Hormuz to do these drills and practicing how to shut that play down or shut that kind of passage for shipping oil down. And obviously, oil had a big pop on that. Now you're seeing a little bit of a fallback as the market's starting to pull back as well. But nonetheless, USO is having a very solid day today, up 61 cents. A very strong day in oil. Natural gas is up a little bit as well today. The UNG is up 7 cents. I continue to think the UNG looks amazing down here. So cheap relative to oil. Oil's had this big, big pop. Natural gas has really just gone straight down. So I think at some point you'll get buyers to come in on the UNG. What we're looking for here is a short-term bottom to be put in. It's a proprietary indicator I'm trying to follow for when that is going to be seen. So far we haven't seen it. It's a good little pop today. We need to see follow-through tomorrow and a couple other things. And then I would start to say, okay, this is now possible bottom on the natural gas front. Look for continued upside. Right now, yeah, it's a little bit of an up day, which is nice, but it's not what we want to see in terms of a firm bottom put in natural gas. And again, if you want to get these signals, folks, these proprietary signals, these proprietary trades, if you want to make money on small caps, large caps, and the market direction, and be on the right side of every market move here like we've been continually over the past 4 or 5 years in this market, then you need to come join us here at InTheMoneyStocks.com. There's a 7-day free trial. 7 days, folks. You get to evaluate us for a full week. A lot of people come, make a full amount of money to pay for multiple years of the Research Center or the Intraday Stock Chat in that 1 week. And they're hooked for life, essentially, as they start profiting from here on out, essentially every week, turning profits continually. So I encourage you, again, it's a free trial, nothing to lose. You cancel before the end, you don't not charged. That's simple. You just have to cancel and you're not charged. Very simple. All right. In any case, keep an eye on that. Come join us here at InTheMoneyStocks.com. Let's take a look at Apple Computer today. Apple's only up 61 cents, had a very strong early morning move, and then came right back in. One thing I want to point out on Apple, the technicals. Where did I tell people resistance was going to be on Apple this morning? Where would they possibly look for a short? And the answer is very simple, right here. See this pivot top on the 8th? Look at the high of the day today. If you shorted right there, look at the amount of money you just made on an intraday basis. Most people hold a stock for days and they don't make this kind of money. They're usually out of the money. We know the exact levels to give you to go long or short intraday trading or swing trading. If you're in the intraday stock chat, we're giving you day trades. If you're in the research center, you're getting swing trades. That's simple. All right, let me just take a look at a play that I'm currently in. MasterCard, I am short from 380, 370. I'm in the money about $12 on this right now. I love the in spirit of bearish pattern development here. I have a break-even stop, so no harm done. That's the beauty of trading with us. The discipline, which is what most amateurs are missing, which is what we give. We give you the exact levels based on proprietary methodology where a stock will have failed a move, and therefore you either know to go short that point or you know to exit that point, and ultimately maximizing your profits that way. All right, and again, that's InTheMoneyStocks.com 7-day free trial. All right, let's take a look at a couple other stocks here. Amazon's very, very weak today. Why would Amazon be weak today? The obvious answer is retail sales and Amazon. Retail sales ugly, Best Buy's earnings, they're all related to Amazon. And Amazon is down about $8 today. It's percentage-wise, it's not a huge drop, but it is a nice drop. I actually gave out a scalp today. I'll show you where my scalp was, guys. This was another great trade. The scalp was right here at this pivot low. And again, many of you may say, hey, well, how did you know to pick up this level right here? I mean, why did you know to buy after this fall? Well, first of all, proprietary time count is involved there. But secondly, look at this pivot low right here. See this pivot low? There you go. I bought, members of the Intraday Stock Chat bought, members of the Traders Life 24/7 crew bought, which, by the way, is the social network for traders, the elite traders here at InTheMoneyStocks.com. Once you join this group, you step up your game. Once you step up your game, you're part of the elite Traders Life 24/7 group, which is, again, a social network of chatting traders, giving out levels, analysis, constant. I mean, right there alone, it's worth the Research Center, no offense. It just is. I mean, it's that core group of traders there that are running it, that are rocking it. You can post, you can ask questions, you can join in. And as you learn and you profit, you just become part of the group. All right, in any case, the buy was right here for a scalp. Profited. I bought, and I made a buck on the trade myself, and then I actually bought this consolidation pattern, made another 50 cents. But bottom line is, more profits in the pockets. That's what it's all about here. I don't care if the market goes up or down on a swing trade basis, investing basis. I don't care either. Because we're in, we have our levels, they work out. That's simple. All right, we have an 80 to 90% success rate in trades. Hedge funds don't have it. Goldman doesn't have that. They just don't have it out there. All right, this is based on, again, proprietary methodology. It's what it's all about, folks. You come here, you learn this stuff, you profit for life. That's simple. Alrighty, enough said, folks. Have a great evening. Come join us here. 7-day free trial at InTheMoneyStocks.com. Again, come join the elite. Come join the pros. Learn the methodology and profit for life at InTheMoneyStocks.com.